Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty as well as the different asset classes. Before starting the video for the next week, just a general disclaimer. This video is only for educational purpose. Please consult your financial advisor before investing and trading. In our last video, we have mentioned that the markets were slightly looking bearish, but any dips was we seems to be we bought at the lower levels, and we had a view of buy or dips because the primary trend was still intact. That is positive. So market initially traded positively, then again it saw some correction, and then again we have seen in the later part of the 2 days, that is Thursday and Friday, market bouncing back and closing on a firm note. So friends, now let us go to the Nifty daily charts and we'll try to figure out what is the pattern which has been formed and what could be the trend for the next week. Now this is Nifty daily charts. As I said, you can clearly see it has been moving in an expanding triangle and moving in this particular range since last couple of months, almost since December, and there is still no deviation of the trend. No deviation of the trend means the trend is still intact. That is positive. You can clearly see multiple times it has taken support from the lower support trend line, and Nifty has bounced 3 times from those particular levels. So this trend line could be considered as an important support for the markets, specifically for the Nifty. Now this is the Nifty daily charts. It has given a strong bullish candle on Friday. This is the daily charts. Let me go to the weekly charts. This is the weekly charts. A weekly chart, you can clearly see it has formed a hammer formation. So again, forming a hammer on the weekly charts is also a bullish pattern for the larger degree trend, at least for the next maybe 8 to 10 trading sessions. Now, most important thing which I would like to highlight is next week is a truncated week. We have only hardly 3 trading days. That means Tuesday, Wednesdays, and Thursday. Monday and Friday we are having a trading holiday. So hardly 3 days of trading week. And again, it is a year end, financial year end, and the month end, weekly, monthly expiry. So everything is coming together in the next week. So next week could be crucial, could be highly volatile. We might see wild swings, markets coming down sharply, again bouncing back sharply. So it is going to be a tough day or tough week for traders for the next week. So overall, the trend seems to be positive, but looking at the charts, I feel one should wait for some pullback in the Nifty. Any correction should be used as a buying opportunity. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 21,980. Below that, the second support is placed around 21,839. And below that, the third support is placed around 21,710. On the upside, the first resistance is around 22,222. Second resistance is around 22,333. And third resistance is around 22,444. These are the crucial supports and resistance level in Nifty for the next week. Traders should watch out this level. Next week is a truncated week, so try to watch this level and trade accordingly in the direction of the breakout. And one should have a view of buy on dips for the next week. So now friends, let us discuss the derivative data of Nifty calls. In Nifty calls, you will see on the screen the action was seen in 22,100 calls, 22,200 calls, 22,300 and 22,400 calls. Now here you can see the option premium is slightly flat to positive. I will take it as a neutral. Nothing great about the option premium. Implied volatility is low. It is between 9.41 and 10.88. There has been a rise in the open interest, rise in the volumes. So maybe the smart money is just looking out for the clear trend for the next week. And as I said, next week is a truncated week as well as the monthly expiry and financial year end also. So on immediate basis, 22,100 could act as an immediate resistance. If Nifty closes above those levels, then there are chances that Nifty might scale up to the level of 22,400 on the upside. So overall, the data of Nifty calls seems to be quite okay. I'm not saying it is bullish or bearish, but it is okay. The smart money might be looking out for a clear trend at least for the next week, for next three trading sessions, because most of the activity would be focused towards the rolling over of the positions, existing outstanding positions from current series, that is March series to April series. So now friends, let us discuss the Nifty put data. In Nifty puts, the action was seen in 22,000 puts, 21,900 puts, 21,800 and 21,700 puts. The option premiums were slightly negative. Implied volatility is between 9.75 and 11.77. It is also in a comfort zone. Here you can clearly see the action was the volume concentration is around 22,000 mark. If Nifty breaks 22,000 and closes below those levels, then there are chances that Nifty might uh, correct down to the levels of maybe 21,800 to 21,700 mark. Here, the important thing is there is slight writing in Nifty put. So there is some sort of strength is seen in the markets. But as I said, next week is a truncated week. We might, if there is a lack of follow-up buying, then we might see a correction. But that correction should be used as a buying opportunity at the lower levels. So, friends, now let us go to the Bank Nifty daily charts. Let me this is the Bank Nifty daily chart. He has given a falling channel breakout earlier on February 29th. Then it has rallied. Again, it has seen a pullback. It tried to pierce into this particular falling channel. And again on Friday, it has managed to close above this particular falling channel, and it has given a strong close. As I said, Bank Nifty has seen an inside day candle. So definitely the highs and lows of Thursday should be the crucial level. If Bank Nifty breaks Thursday's low, which is 46,570, then we might see a correction of maybe 200-300 points from those levels. So looking at this particular pattern, the market seems to be stable. Again, on the weekly charts, Bank Nifty has also formed a hammer, and hammer on the weekly charts seems to be a positive indication. But looking at this particular pattern, we feel that any dips should be used as a buying opportunity because of the truncated week, where I feel some sort of exhaustion could be seen. And if there is a lack of follow-up buying, then definitely we might see a correction. But that correction could be bought at the lower levels. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 46,566. Below that, the second support is placed around 46,310, and third support is placed around 45,828. On the upside, the first resistance is around 46,900 and 990. Second resistance is around 47,231, and third resistance is around 47,500 mark. So definitely these are the important supports and resistance level in Bank Nifty for the next week. Any dips should be used as a buying opportunity, should be the view for the next week. Now friends, let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 47,000 calls, then 47,500 calls and 48,000 calls. The option premium were slightly negative. Implied volatility is between 11.92 and 12.58. There has been a shedding in 47,000 puts. 47,000 strike price call. There has been a shedding. Volume is rising, but open interest is shedding. Now here you can see the next concentration is around 47,500 mark. So most probably, if Bank Nifty closes above 47,500, because the shedding is clearly indicating that the writers of this option premium might have started booking profits, but we will see on Tuesday that if Bank Nifty sustains above 47,000 mark, then there are chances that Bank Nifty might rally towards the level of 47,500 to 47,800 mark in the next week. So looking at this particular drop in option premium, we feel that a cool off cannot be ruled out from these levels. Now friends, let us discuss the Bank Nifty put data. In Bank Nifty puts, the action was seen in 46,800 puts, then 47,500 puts, 48,000 calls. The option premium were slightly negative. Implied volatility is between 11.92 and 12.58. There has been a shedding in 47,000 puts. Below that, the second support is placed around 47,000 800. And 46,500 puts and 46,000 puts. Now here you can see there has been a significant drop in the option premium, which clearly indicates that the smart money has already into writing the out of the money and at the money puts in Bank Nifty, which is indicating the strength at these levels. The impact volatility is slightly higher. It is between 12.88 and 14.78. There has been a rise in the volumes, rise in the open interest. So on immediate basis, 46,800 could act as an immediate support. If Bank Nifty breaks those levels, then there are chances that Bank Nifty might slip down to the levels of 46,500 and maybe to between or maybe around 46,300 odd mark. But that should be used as a buying opportunity. So looking at this particular data of Bank Nifty charts and derivative data of Bank Nifty calls and puts, the trend seems to be stable. Because of the truncated week, I would like to again say that a cool off cannot be ruled out, but that cool off should be used to buy at the lower levels in the April series. So, friends, overall, looking at the Nifty, Bank Nifty charts and data, as I said, one should follow closely monitor the supports and resistance level, and any dips should be used as a buying opportunity. Should be the strategy at least for the next week. Now, friends, now let's come to the final segment of our show, which is positional call. I have identified the stock. Now, you can clearly see the stock has corrected significantly or sharply from the levels of 815, which is its lifetime high. It has corrected and taken a pause around this. You can clearly see horizontal support trend line, because earlier this juncture was considered as a resistance and now it has become a support. It has taken a pause around 590. It has managed to get stabilized at these levels. You can clearly see that the prices are getting stable at this juncture. So maybe it might consolidate and it has a potential to break this falling trend line at this from these levels. So most probably the stock has potential to witness a bounce back rally in next 6 to 8 months or maybe in long run. So definitely one can accumulate, I mean to say, the long-term investors, swing traders, positional investors can accumulate the stock on in the range of 624 and on corrections to 610 for an upside target of 720 in long run. Long run means maybe more than 12 months. Definitely the stock has potential because currently the stock is on the verge of a breakout. It might take some time to give a breakout. It might consolidate, but this consolidation can be used to invest for the long-term horizon. So definitely the stock is looking good. The setup is quite positive. You can clearly see it is on a verge of a breakout of a falling trend line. Stock has corrected sharply from the levels of 815. It has taken a pause around the multiple support trend line around 590, and now the stock can give a decent rally in the long run. So definitely, as I said again, one can accumulate for long term for a target of 720 for an investment perspective. So friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.